Traders, welcome back to another price action trading lesson. Today's session started with bearish trend down, which had overshoot. This is going to be quite a common scenario during our lesson today, because the channel is fitting very well and there is break of the trend channel line, the 90-degree spike down far from the EMA, and this is unnatural activity in the market. Overshoot can generate stronger pullback in the opposite direction, and it can sometimes even reverse the conditions of the market. Now we can see broad two-legged pullback played out with the break new high, and EMA flattened, and we have consistent price swings up and down. So right now the structure is a clear trend range. We always have to identify the structure, locate the key levels, and there is slight bearish bias. We're going to combine the bearish bias rule with the trend range rule, buy low, sell high. So we're using the candles to help us identify what may happen next. So right now we're expecting the directional bias to be a sideways consolidation, focusing on the range rules. We're following short-term channels. We have a break in the new extreme of the uptrend, and this is important because this tells us the bullish momentum played out. And notice the top of the trend range is showing resistance. Now this bar is tiny, uptrend played out, and because we're selling high with the main bias, we still expect new low for this channel at this point. This is first decent high probability setup for the day. This is basically a triple test, large triple top, small risk, and market continues. Can we go below EMA? We cannot. EMA keeps holding, so this is not great because this means I cannot go short below doji lower high because it is above EMA. And now we have a false second entry long. Now this is more advanced way how to read the chart, but failed second entries can form in trend ranges on the opposite side of the EMA, because if we're going to look at it from the bullish perspective, there's a second entry long. All these bulls buying the second entry long, they're going to get trapped buying directly into these highs. So more advanced trader, after some years of experience, you will see this a lot, and this is not such a bad setup. Selling above EMA, the failure, it has to be trapped, not really lower high, but failure, because the bulls got trapped and I can mark it more advanced. The market is working lower, so I'm going to redraw, shorten down to working lower. At this point when I was watching this live, I was even playing a little bit wider channel, but notice what we have. We have massive spike off the support. I was kind of expecting lower high break, I was expecting breakout pullback to form, because I was expecting new low for this downtrend, but the fact that the support keeps holding is indicating more of a trend range structure, not really the bearish bias. It looks like the bearish bias is slightly dissipating. We have a second entry short, which my bars when I was watching this live look a little bit different, but it seems a bit too congested. We bounced strong off the support. It's not the greatest setup, especially if now we have doubts if the support is holding strongly. Now I can redraw a little bit wider channel. Why? Because the market geometry fits really well around this area right here. And now we have another overshoot. Overshoot once again can lead to break of a channel or possibly reversal. You can see strong bullish spike up, depletion far from the EMA. So there's going to be a second entry long at the EMA. I cannot take it. So market is correcting, and now we have second entry long. It is tempting to go long, but we are not pattern traders. It doesn't matter if there's a second entry long. There is not a good context to support it. You are buying directly into these highs. Now I can move a little bit higher like this. I cannot go long at the top of the trend range. Remember, we want to buy low, sell high, and we had overshoot. So you expect selling pressure to step in based on the range rules, and if you're going to combine it with the overshoot, you expect stronger correction in the opposite direction. So overshoot is important. Price action pattern, let's say, you need to learn to analyze, because it can help you to expect some stronger pullback in the market. So we cannot go long. It didn't trigger regardless, but you cannot go long. And now that the market played out with the broad two-legged pullback, since the market is pushing back above EMA, now it's starting to be obvious that we may test the new high of this uptrend, because if the range rules are going to take over, we're going to go back all the way down here, test the support. The fact that we're back above EMA strongly, this helps us to expect right now the new high. I'd like to see a high-low confirmation setup, little pullback, something like this. That never formed, and market created new extreme for this uptrend. So we're pausing right now to go long. Most breakouts will fail. Now, I cannot sell because there's a horrible bar, but now we have tiny lower high. I'm not a big fan of this setup just yet, but in trend ranges, most breakouts will fail at least temporarily, and trading is about taking a chance, because your risk to reward ratio on this setup is gigantic. This is tiny bar, and if you are right now, the trader's equation is in your favor, because the next stop is all the way down here at the support. So if you took this trade right here, because trading is about taking a chance, I definitely cannot blame you. Decent setup to take a chance. as a trader, you are a risk taker. This is not fully easy high probability setup, but such a small bar, you're quite far away from the EMA. You know, why not? Why not take a chance? It didn't work this time, but it's okay. It was decent, valiant attempt. Now I have to ask myself, why does price action keep working higher after new high? There is some market geometry here, so there's probably a bigger channel, something like this. But there's another overshoot. So once again, this is third overshoot already. And at this point, you ought to know how you should analyze the structure. You expect stronger pullback in the opposite direction. So when I see overshoot like this, I'm a little bit disappointed because I know that I most likely will not get a chance to go long anytime soon, because the overshoot can always basically put a wedge in your plan. So just be patient, analyze the short and downtrend. The downtrend is still in play. There's a second entry long. I cannot go long. Horrible doji, congestion, EMA in all these bars. The first leg down, there can be new extreme. Second leg down after overshoot. No entry here. Horrible bar. Even with great signal bar, you cannot go long because the downtrend is in play. There can be second leg down and after overshoot. Remember, after overshoot. Now, had there been decent bullish bar for that second entry short? Maybe, because it's the second attempt. That never formed. Now below EMA can reset, so I have to reset the cam. Breaking low. So now I expect push above EMA. Can we go long? Okay, now there's a wider channel, something like this. There's a brand new opportunity which explains structure pretty well. We're getting the confirmation here, but still it has overshoot. And now I can see EMA flat, so I can draw small trend range like this. EMA is flattening, something like this. You have a high-low confirmation setup, which would be okay, but the signal bar is pure doji. We're right after overshoot. You know, I need some bullish bar here, especially if we have overshoot. You know, such a horrible bar, I can't go long. And by the time I get a failed second entry short, it's even worse bar. Straight doji as well, tiny little bullish body, but the tail at the bottom is not great. So bad failed second entry short. I cannot go long here. We had overshoot. We're in the middle of the trend range. We're just gonna be patient. Notice I keep drawing these shortened channels down. I cannot go long as this downtrend is in play. Now at this point, I'm anticipating first leg down, second leg down, and I want to see new high. So I'm thinking about some break, new low, push above EMA and buying here, maybe high low or failed second entry short to get the new high. I cannot go long until that happens because the downtrend is still in play. But notice, market completely reversed all the way down and I need to adapt. So as a trader, you're going to have to adapt all the time because the market can shift and you cannot be married to one idea the whole time. So don't be afraid to adapt, admit that, okay, a brand new structure may happen first. So now we have break downtrend working lower. We retrace too far down, and I'm gonna look that the beginning is here, so I cannot right now expect new high just yet because it's such a deep retracement. I'm expecting more retest of the new low for this downtrend. So you can see as traders, when we are using price action rules, we're always trying to make sense of what is the structure. Is it sideways? Use the EMA as a supportive indicator. If the EMA is flat, it is a trend range, so we're looking for key levels. If it's pointing up or down, we're looking for channels following the trend line rule. So right now we expect new low for this downtrend. Once again, this is basically standard procedure. You shouldn't even think about this. You should do this automatically. Always redraw these short-term channels. We have a second entry short. I expect new low, but I cannot sell because the uptrend is in play. So I need to be patient. What am I expecting? If I expect new low still and there's uptrend, I want to see lower high confirmation, second entry short or double trap. And now we have a little lower high breakout pullback out of this congestion. You can see sideways, break lower, bullish trap, reversal down, lower high breakout pullback. Now the lower high has no bullish bar in between. It's a little bit steep and it's closing quite low, so you may wait for deeper limit order. But regardless, this is good setup to take because we're below EMA, downtrend is new extreme, it is confirming the second entry short, and this is solid lower high breakout pullback. Worked just enough for a scalp and market reversed up. So at this point, we're going to consider this as new low attempt because sellers are basically treating this attempt as new low. Price action is working hard, so I'm going to redraw a brand new uptrend. Why? Because I expect right now even new high for the initial channel. So two trends are in play. What am I thinking about? Second entry long at the EMA, okay? But we already have a break and a new extreme, so nothing I can do. Unfortunately, you know, these patterns are the easiest to trade when everything aligned. but there was no two-legged pullback, no pattern here, high probability one, so I gotta be careful. Let's see what's gonna happen. Okay, and market is reversing down. The bulls attempted to get a new high, almost reached it, but at this point, you cannot no longer expect new high for this channel because remember, unless it is a big trend day and a strong trend, you want to see new extremes fairly quickly after the break and recently. And because right now it's taking too long and the structure is evolving into trend range, this attempt was enough. Okay, so you're no longer thinking bullish that we're gonna get new high. Because remember, you want to see those new extremes to get new extreme quickly, unless of course it's a very strong trend. If it's only, let's say, uptrend day, the correction may be longer and you're better off just thinking about bullish patterns still if it's a long uptrend day, but this was ranging market all over the place. You have to adapt quickly. Repeat pattern, what is happening here? The correction looks almost identical. So I'm going to redraw the short-term correction. Once again, do this automatically. You shouldn't even be thinking about this. This is done on autopilot. We expect new low for this downtrend. Once again, it looks the same way as the downtrend right here. Second entry short inside the channel. I cannot sell. Horrible bar. You cannot sell regardless. Below bullish bar. And now we have basically double trap closing below EMA. Uptrend played out with the break new high. This is big. Uptrend played out with the break new high tells you that you don't have to question yourself. There's going to be a stronger pullback. There won't be. So this is basically a double trap inside bar, yes, but the context is so strong. Downtrend needs to get new extreme. Repeat pattern of this. And this is decent double trap setup. We created the new extreme, which means you have to pause to be looking for short entries right now. There's a second entry short, but after we have a break new low, you know, I cannot really go short here because we have a break new low. I cannot justify it well. Massive spike up. The structure is resembling trend range. You can see flat EMA, consistent price swings up and down. I would like to see second entry long at the exponential moving average. We're breaking the EMA, okay. And now it's getting a little bit confusing because is the downtrend going to get new low? Notice the retracement. Is the uptrend going to get new high? Most likely uptrend new high because we're using the range bottom here as the momentum the bulls are buying from the bottom, but it's unclear. Okay, fell second entry short, a horrible bear bar. I cannot go long here. Uptrend played out, almost played out. We break lower, but I cannot take any setup because it is getting way too late. So now you know how to trade overshoots when you see them on the chart, because a lot of channels today had overshoots. You always expect the stronger momentum in the opposite direction. It ended up being a big trend range. Couple decent high probability setups. If you are a beginner trader and you want to get more experience, once again, you can even look the NASDAQ and the CL charts to practice because the price action works the same way on all time frames in all markets. So I include this at the end of the review because the price action works the same way. If you're trading live or you have the prop firm account, you may want to reconsider because you need to first test if you can handle watching more charts because you don't want to miss setup. So you need to first test it, how you can handle this. But if you're a developing trader, you're still on the simulator, which you should when you first are starting to trade. You can watch more instruments because you can practice a little bit more. And the last thing to talk about, you don't necessarily want to be expecting new extremes indefinitely. For example, once this downtrend didn't get new low around this area, once you see basically this bullish push uptrending higher, the trend range is just too long that a brand new structure was established. This is the trend range and you need to adapt. So only if the trend is strong and it is a main daily bias, then you can be leaning more towards the trending structure. But if you see a brand new price action forming and you're getting far away from the channel and new extreme is not tested, it's most likely not going to be tested and you need to adapt to the most recent structure. So I hope you had a good trading day. I hope you find the video educational. I'm going to talk to you next time. Good luck with your trading.